Hello, good day everyone. How are you all today? And welcome back. My name is Hussein, and today I would like to bring you once again on some of the market updates and what are the major events that will be impacting in the FX market, also the commodities as well as in the stock market. All right. So for today's story, we're going to cover the top five topics that will be also closing our week towards the end of the week, and you will have the overall picture and the clue on how the financial markets are performing. All right. So first of all, let's get started first from the job report ahead, which is going to be released tonight. Non-farm payrolls from the United States, as employment number arrives about Malaysian time about 8:30 9:30 p.m. While the market will still watch it very closely, with acknowledging that the numbers will give the picture of an economy far from where we are right now, right? Well, the job report survey was from the week of March 12th, before any major US state had gone into a lockdown, right? So we know that these job reports that are going to be released is from the previous month before the lockdown happened, right? So for that reason, economists are expecting a drop of non-farm payroll about 100,000 from the previous numbers, right? It is a big number change that we ever expected in the history. As we know, 6.6 million people filed for the first employment benefits last week, which actually raised yesterday from 3.3 million to 6 million. So you can imagine that job report is going to be a huge difference in the non-farm payrolls. Beyond the headline numbers, the main thing to look out should be the measure of those who became part-time workers for economic reasons, right? And also for those who have actually lost their jobs, right? So given how uncertain everything felt in early March, it's a possible movement that average hourly earnings and also the involuntary part-time work, all in all, it has been effective. So what does that mean? Usually, when the non-farm payrolls is weaker, that means employment industry is not doing good, which will be giving the weakness to the American dollar. All right. So due to these numbers and the sentiment of the market, we expect job reports to be extremely negative, which is why US dollar will fall. All right. According to Goldman Sachs, said earlier this week also that they expect the second quarter jobless rate to come in at about 13.2%, rising from 15% by mid-year, which was reported by the Bloomberg. All right. So this will be the job numbers that you can actually mark down your calendars. In your economic calendar, it is available. So you will be able to see the outcome of the job reports that will be published or released from the government office today. Right. Secondly, oil market had a volatile closing of the day, whereby oil came out of the blue to usurp the trading day from coronavirus, all right, from COVID-19. Well, all it took was Trump tweeted his expectation of production cuts to send price rocketing higher, right? So crude has been beaten down so much, it is not surprising those expectations led to a spike. But as is often the case with policy by tweet, investors and traders are now left to look for specifics, right? So in production cuts do happen, if production cuts do happen, then we will see after the OPEC meeting, Saudi Arabia, that has actually requested by them, any details on the specifics of a date and time could keep the bull satisfied, right? So Saudi Arabia is also willing to bring its production down from around 9 million, basis points. So by Trump called expectation of a cut of about 10 million to 15 million barrels per day, right? So all in all, Russia is also not saying very much, but an official word from them could be a market mover as well, right? So all in all, it was a very volatile day. In fact, even today will be very volatile closing week for the oil markets too. So all in all, keep your eyes on the momentum in the oil market, right? So we also had ISM services, which we have seen the major diving in there, whereby the last batch of economic data for the week comes shortly after the opening bell, when the Institute of Supply Management issues its Services Purchasing Manager Index for March. The measure of services activity, already weighted more by Wall Street than manufacturing given its greater share of GDP, has taken out on a significance because of the coronavirus has hit to the economy very hard. right? So all in all, that was an index which actually came out from it fall to 44 from the previous month of March, which was high at about 57.3, which is a very low number, right? So given the recent numbers, a bigger drop wouldn't be a surprise, which had already happened, right? So but it should be noted that record low for the index since its inception was in 1997. That was about 37.3, right? So in March 2008, as we know, the financial crisis has happened before. So these numbers that is being released is somehow similarly linking to that. So all these numbers are giving us a clue or a direction that US dollar is expected to fall over longer run, right? So moving on to gold prices falls on a short-term basis, even though regardless of unemployment rises in the USA. But overall, if you see the direction of a gold, because now investors would want to move their funds into safe haven, right? As you could see that stocks are down, treasury yields is down, right? Bonds are down, right? Wall Street has tumbled, Dow Jones is down, S&P 500 is down. This is why, because due to the impact of COVID-19. All right. Now, even though when the COVID-19 is over, well, we pray this for everybody, it should come to an end soon, and it will. Even though has came to an end, but the fear or the pressure or for the market to come back, which is mostly the stock market and treasury yield, will take some time to stabilize, right? So all in all, this is going to benefit silver and gold, right? So over a longer term, gold is very bullish, which is giving a very good opportunity for longer term investor to buy gold, right? So all in all, as we see and try to understand from this overall story, that we know that USD is going to be weaker, American stocks are going to be weaker too, will fall more. So that you can grab the most opportunity to benefit from it. Okay, so all in all, this is a little bit of story for the day, and then now we would like to bring you for an overall review of the week on some of the currency pairs that has actually been performing in either over direction, right? So GBP, JPY holds steady at the level of about 133, right? Because it has been trying to make a form of bullish momentum, but it is still holding at that level until it finds its way up. We will be showing you in a short while on the live chart, right? Same goes to Euro JPY, finds support near the level of 117. Euro USD falls despite the dollar has been weaker. So all in all, it has been trending down, and then it is trying to find more momentum to find its room down. GBP USD trading at about 1.23 plus minus level, which is also forming a bullish flag, and then the USD halts for a bit. Why? Because there was also Chinese number from PMI numbers came from manufacturing numbers came from China, even though they were stronger, but it found difficult for the Kiwi to go up. Then USD Canadian drops after Trump wants to make an oil deal. Well, it was a very volatile day for USD CAD. USD JPY direction also halted from the outcome of a non-farm payrolls, right? So these are some of the currency-based movement over the week that has been happening. So all in all, we believe this will be very useful, informative for you. And just move on to the next to our analysis on the price action of this currency pairs, which we'll be showing you shortly. All right, so like we mentioned earlier, that the US economy is at the moment in a trouble, and nothing shows more than the jobless claim that we just saw recently, right? So more than 6.6 million people filed up for unemployment benefits. That was just like last week expectation and double than that, right? So this was the worst claims report ever that we have seen in the history, which reflects that economy is not in a good shape. So usually, as we all know, when the economy is not in a good shape, we expect dollar to fall. This is why, as you could see here, USD JPY has been hovering down, like we spoke about it earlier of the week, that we are expecting probably a short retracement, but we believe that after today's non-farm payroll report that is going to be released, it will open the door for USD JPY to fall below further. right? So all in all, it is just a matter of time until it will drive the USD JPY lower, right? Beside that, other currencies like for New Zealand dollar, all right, and Australian dollar, that also fell harder because of the greenback risk aversion speeded into the markets, right? As you could see here, overall it is in a downtrend, but we believe that due to the weakness of the American dollar that we are expecting uh, in this from today's non-farm payrolls, this probably will break uh, up from this zone, right? So you may expect this to reverse up for the time being until the non-farm payrolls. Okay, and looking at USD CAD, like we spoke about it earlier this week, that this is a major resistance here. Like we mentioned that here is a major resistance, right? So we are expecting this to actually now it has found support around here on. Yeah, so it has found a support. As you could see here, the price was trying to break the level, but it is being supported here. So all in all, perhaps another break below will open the room for the USD CAD to fall further below this support, right? So you may expect this like all the way down here, right, to complete the pattern, right? Now looking at Dow Jones or gold, yeah, my favorite. As you could see here, like we mentioned earlier, that gold is, however, it is forming some sort of a pattern. Probably it will be coming down again and then slowly going up. Right now, it is from this triangular resistance. Right, it needs a breakout to find more room or further room to complete this pattern. Right. Okay. So once the non-farm payroll is released, the break above, because we are expecting non-farm payrolls to be weaker, so the break above will open more room for the gold. And in longer term, we expect gold to trend higher. Then, beside that, we also let's have a quick review on, like we mentioned earlier this week, USD CAD to fall below the certain level, which was stated here. Yep, as we mentioned earlier week that this is forming a pattern that will be opening a room or more door for USD CAD to go down, right? So it did happen exactly as we forecasted earlier of our week. So guys, if you are following our videos early of the week and throughout the week, you will be able to keep track on our weekly updates that will be keeping you connected from one video to the other one. All right, so that's all for today. We will be seeing you again next week with more updates and more outcome of the market philosophy. Till then, take care and I will see you soon.